Hi, folks. It's Aidan CryptoBirb speaking. Welcome to today's AMA session. AMA session with our official partners at Soil. You may know them on Twitter or /X, I should actually say, at Soil_farm. And there's a lot of discussion lately about the RWAs, about the real world assets, about the newly pending MiCA regulations, and how difficult and inspiring at the same time might be for so many projects to actually comply with those rules. This is, I think, putting together a very promising scope for the next days, weeks, and years as we grow and develop the crypto market. And like we briefly touched upon this merit, I'm joined today by Jakub and Nick Motz. Nick Motz and Jakub Boyan, both gentlemen, are actually here steering this excellent project of our partners at Soil and are here to talk and help us a little bit understand why and how we can learn more about Soil. So without further ado, please welcome Jakub, please welcome Nick, everybody. Um, they are, I think, the right people to answer a lot of your questions. So if you have any of the questions, feel free and do not hesitate to drop them in the comment section on YouTube so that we can come back later to it as well. If you're watching that on Twitter or /X, drop them in the comments. I'll do my best to keep up with the comments as well. Jakub and Nick, how is it going, gentlemen? How's your day going so far?
Awesome, super busy. The listing coming tomorrow. It's been 24 hours pretty much working. So excited and yeah, working hard.
How about you,
Yeah,
Jakub?
we are developing this project for almost 2 years. Yeah, so this is like a last straight home. A lot of tension, nervous, stress, but yeah, also excitement. Tomorrow, after 2 years, we have a listing. We just finished over the weekend very successful IDO. We raised over $890K.
Wow.
With such a difficult, let's say, market, it's quite impressive. But that's the first step. The second step is tomorrow with the listing, and of course, as someone say, it's that's only the beginning, because then we launch the protocol, and we need to build the total value lock in the protocol, generate revenues, share it to our stakeholders, and so on. So the whole journey will begin. This is just the beginning tomorrow. Man.
Awesome. Love it. And I cannot get more excited than this. Actually, when I read at your excellent, by the way, I'm a big fan of your Twitter profile account. Not only that you're a golden verified organization, which looks pretty fine, you're actually also paying a very good amount of details and attention to the very details. I'm just reading for your Twitter background: secure returns on stablecoins backed by real world assets. So why don't we take a couple of minutes and talk about what Soil is? Let's talk about that.
Sure. So we are a lending protocol that combines traditional finance with the crypto space. And for us, we knew even before the whole tsunami of collapses that happened last year over the summer, before Luna, Anchor, and other protocols collapsed, we knew that as we got a broad experience in the traditional finance, in the corporate finance. Nick is running and co-founder and founder of a private debt fund. So we knew that if you offer some yields, some profits for the investors, you need to have like a proven source of the yield. Yeah. So there is a old saying in the crypto space: if you don't know what is the source of the yield, probably you are the one. And when we started the project, we wanted to provide crypto investors with a tangible, reliable yield that is secured and stable, and that is not based and is not dependent on the sentiment on the crypto market, and it's not dependent on the price of the token of the protocol. And how to solve it? It was natural that we need to combine it with a crypto space combined with the traditional finance, because we are still early in the adoption of the crypto, and there are no many business models that have a substance that actually generate the revenues that are not based on self-printed tokens or tokens printed out of the thin air. Yeah? So you need to somehow bring some tangible yield to the crypto space if you want to offer them the yield that is really reliable, secure, and secured. And for me, I had a broad experience in the corporate finance. For many years, I worked in a big four companies in mergers and acquisitions, in the PwC, EY, then for the leading media and e-commerce companies in Europe. And then when I found out about the DeFi and what blockchain gives, what smart contracts give to, and how we can improve the a bit obsolete financial infrastructure, simply to improve it and adopt it or adjust it to the digital era. So I said, okay, maybe it's time to use my broad experience in the corporate finance and somehow leverage and use the new technology blockchain to simply develop the project that will merge these two worlds. Yes, and that's how I met Nick. And Nick, that is owner, as I said, of the Mount TFI, one of the leading private debt funds in this part of the Europe. Nick, if you could elaborate a bit about yourself and Mount TFI, and then I will also elaborate more about how the cooperation look like.
Yeah, I think thanks a lot. I just to say from my end, so I know it sounds kind of corny and funny, but there is kind of a mission to what we're doing, and it comes out like what Kuba said, and from my experience before we met together and formed Soil about 2 years ago. There's two aspects. So I founded a credit debt fund about 6 years ago. We have, transaction experience over 200 million euro in credit, so providing loans. And I think this about Soil, I think for everybody, I think this is absolutely the most important thing, combining, our knowledge with the real world. And in debt, if you look at a lending protocol that combines, loans in the real world, and you look at different projects in the market, you really have to focus on the investment team. What's their experience? Have they been in different financial cycles? So I think this is something that, we bring to the table, that we founded the company 6 years ago, and we bring the whole investment team that has over 200 million euro worth of loans originated and actually paid back, because at the end of the day in debt, it's easy to give out money. It's hard to get the money back with interest. So this is something that really, we bring into to Soil. And so what I noticed working, there's two aspects that, the mission is there. In the real world, there's not enough money to supply companies, with capital to grow. And you only have the banking sector, which is old school and has been running for a long time. And so banks are very restricted. So we're really cutting a big piece from the financial sector. And number two, there's not a lot of private credit funds such as Mount that are able to provide the financing. So you have all these companies that are growing and have no money or access to different money to grow. On the other hand, you have institutions that provide the money, so such as banks, insurance companies. And so this is something from the real world. Like actually a week ago, I was talking to a big institutional lender, and they're like, why are you even giving access to, the community, or giving access to individual people that can provide loans to companies that want to grow? And so this only should be for institutional, sophisticated investors. And in my opinion, that's bull. And I think we should democratize finance. And I think blockchain is exactly this. We can provide through Soil, give people access to actually make money on the loans, and have a professional team that can provide money to companies in the real world to go. And that's how we met with Kuba, and then this is 2 years, and exactly what Kuba was saying, we're excited because I think at the end of the day, everybody's like, oh, how's the listing going? But listing is just a milestone. We got to get the protocol going, this month. Then we need to actually grow our total value lock. So I think we're in it for the long run. And I think that's a big difference comparing us to different projects.
Yeah.
Excellent.
So in few words, just to summarize it in a nutshell. So we are simply taking a stable coins, converting the stable coins into fiat money, use it to finance the corporates operating in the traditional world. Then they generate tangible yield denominated in, let's say, different currencies, but in the real currencies. Then we convert it back and bring it back to the crypto investors. And that's how we can pay them on the stable coins. We can pay them yield that is in the stable coins. So that's what I said. So we got a locked and confirmed cash flows that are denominated in the real world money. Yes. So no matter what is the sentiment on the crypto market, no matter what is the price of the different tokens and our token, we got a cash flow that we can always serve as a fixed interest for the crypto investors, and that's the difference. Yes, we do not have to print more tokens simply to pay the yield that we offered. We don't have to inflate our tokenomics and so on, because we got secured cash flows in the real world based on a loan agreement with the superb companies that were screened and that was made a proper due diligence, and the loans are fully collateralized with the real world assets, and not only real world assets, because for sure we will cover some our competitors. But what is crucial, and I think that we are one of the first projects that not only finance the let's say invoices or some cash flows, financial cash flows, but our real world assets that support the loans are truly diversified. So we've got if we are lending money to the factory, so you've got a real estate or land plot as a collateral. Yeah. So these are the diversified different assets that serves as a collateral. Of course, then we've got also personal guarantees, escrow accounts, and so on. So all these assets serve as a full back for the loans. As Nick said, it's easy to lend the money, but the tricky part is to get the money back with the interest, and that's what we do. That's why we got a extremely experienced team that is responsible for the whole process. So in case of some default, let's say that is that may happen, so they know how to get these collaterals and turn it into the cash to use this cash to repay interest and principal. That's it. In other protocols, you've got protocols are trying to pass this default risk on the investors. They are saying, okay, we've got a kind of DAO organization, so you can vote to which entity we will lend the money. And this is bullshit, yeah, because no one knows how to exactly analyze the company, how to check the books, especially when these companies are from all over the world. You don't know how to analyze the balance sheet, income statement, and so on. We are not doing it. Every loan pool that is in our protocol is equally secure. It's our job to be sure that there will be no default, and that's how we are different from the other protocols. Some will say, okay, this is a lot of, let's say, human factor in this protocol. Yes, it is, but for us, it's crucial to generate attractive yield that is first of all is secured, and you will get back your not only principal but also interest, and that's our mission.
What a good rundown. And it feels like we've already spent like an hour talking and it's just 10 minutes in, I think. So it's pretty wild, guys, how Jakub and Nick basically have got so many knowledge, and there's all the credibility in the world for that, because Jakub, again, just to remind, is a chief executive officer at Soil, while Nick is actually the representative for chief investment officer. He manages as the chief investment officer. This is, again, a lot of credibility. And on one hand, when I talk to the people, there is, especially the institutions, there is still this kind of like a vibe for Bitcoin and other cryptocurrencies, other tokens, the whole cryptosphere being this internet magical internet money, right? And then you gentlemen are here basically trying to transpire this very opposite angle, this very opposite view of fully secured real world assets, right? The transactions, the yields that are actually backed and collateralized with real world assets. So that's a fairly extreme opposite of what crypto has been known so far. However, isn't it right that it's actually a gateway to this big institutional money?
Yeah, I think so. Like I think at the end of the day, it's I think what you said, crypto crypto's crypto, but at the end of the day, there's a blockchain technology behind it, and I think this is the key point. And if you listen to Circle or the guys talk about it, like it's super easy example. If you have a software engineer somewhere in Asia or in Africa, and you have to send them a couple dollars. Through using stablecoins, using the technology, you can instantly send money, through a transparent, low-fee way. And I think this is the beauty. So I think moving it to Soil, when we raise money for, let's say, different loan pools, and you can deposit your stablecoins and earn an interest. So you can be no matter where in the world, you can actually access the loan pools instantly. And we use that money to, trickle down, put into fiat, and actually put it into work in the real world. From our perspective, as a fund manager earlier on, to get money from anywhere around the world, with regulations and everything, it would be, let's say, impossible. On the other hand, why can't someone, let's say in the Philippines, earn, let's say, 8% on their stablecoin, financing companies in Poland, which would usually also not be possible. So I think the technology is definitely something that's there, and I think with the maturing asset class of crypto, I think a lot of institutions will be looking at it. We're talking to crypto banks, different platforms where we can be, let's say, a kind of a white label solution for them. And I think if you can again do it in a normal way, show huge experience behind it, I think more and more institutions will join the asset class.
Very well. Very well. I mean, that's a very good, again, that's a very good, I'd say, period in time and an opportunity to scale into the real world assets, right? Again, I might be wrong. From the last time I checked, I think there was a chart floating all over the Twitter that I think there was 1,300% since the beginning of the year that the overall interest in the real world assets as a category kind of like, has transpired and has emerged. So right or wrong, what we are talking about is this is a perfect actual time for such a discussion, gentlemen. So there was a question, there was a very good question actually from Lenny Cash on Crypto. Now, shout out to everybody who's watching that right now on Twitter and on YouTube. By the way, drop a comment if you have the questions. We'll try to fit it in our excellent agenda for the discussion. While there is a very, very valid question. Why should anyone basically care about soil? What's in there? What's in it for the investors?
Yeah. So first of all, we are generating money based on the arbitrage of the cost of the capital. Yeah. So that's the beauty, because the interest rate all over the world are different. You said about that real world assets, RWA, are booming right now. But if you will dig into it, what is the structure? Actually, it's nothing special, because it's it's like a circle. What they are doing, they are simply minting stable coins that are backed with the treasury bills. Yes, and they are saying that treasury bills are real world assets. Yes, they are. But what we you can let's say multiply this business model, because there are other protocols that are saying, okay, give us money and we will use this money to buy bonds or some other ETFs or other financial instruments. So they are like additional intermediaries. There is no value added from their side. So they are simply handling the process, yes, and taking and charging for this process. What we are doing, so we are actually responsible, as I said, first of all, thanks to the fact that we are lending money to the corporates, we can generate higher interest rates. But it's also tricky, because there is a default rate that is higher. So you need to have a specialist. You need to have like an investment team, as we got, that will check the companies, verify the companies, and will take care of the process. But there are benefits from it. If you've got a very experienced team, then you can generate like a 14%, yes, on the private debt, let's say, yeah. Of course, different types of loans, but you can generate a higher yield than on treasury bills. That's what we are doing. That's how we can offer investors higher yield comparing to the yield offered by other protocols that are simply reinvesting money into treasury bills. Yes. So and what Nick said, and I think that Nick, if you could elaborate a bit about right now the private debt market is thriving, because bankings are limiting or restricting their lending policy, and it's the best timing for investing in the private debt, and that's what we do.
Yeah, just to add on that, I think it is actually super exciting from my perspective. From if you look at any big asset managers, if it's Blackstone, Goldman, or everyone, they're all looking into private credit. And so why private credit? So mainly the source of capital is more expensive today. So we're done with the era of cheap capital. So if you look at the risk-free rate of a bank, it's for example in Poland it's around 7-something%, depending on where everybody lives. It's much higher than the last couple of years where we used to live in zero interest rates. So what that means is the cost of capital for companies that we lend to is higher. So when we go to companies, we can find great companies that are strong cash flow, on great businesses, and we can charge higher capital. So we can charge anywhere between, if it's senior credit, so let's say instead of a bank, because we're quicker and more flexible, we charge anywhere between 10 and 14%. And if we charge mezzanine finance, we're a little bit higher on the risk, but usually it leverages your equity returns. We charge anywhere between 15 to 18%. So you're in a time where you get very good yield and very good collateral, because there's now competition where we're starting off, because Mount is going to be in charge of Poland and the Central Eastern Europe. Then we're going to be adding on different managers for different geographies, for Scandinavia, for South Europe, for the US later on as we expand, that we find guys in Poland that there's no competition. So very strong collateral, higher returns. And if you look everywhere in the market, now is the time. So equity markets, have slowed down, whereas debt is the future. So I think what is super exciting. And I bet you're going to ask about, I think, the token and how Soil is. So that's cool.
Yeah, so it was a bit a long intro to the token, but I wanted everyone to understand exactly how we generate the revenues, because all profits, and it's all profits that are generated by the Solid protocol are attributable to the token owners. So we simply transfer all profits reinvest into the protocol, and we do it in 3 different ways. Of course, our tokenomics is deflationary. So we will use the opportunity to, and that's the beauty of having a token and not being like a company that is listed on New York Stock Exchange, for example, that only gather shares. Because when we've got a token, we can use different price actions and simply use the opportunity to buy back token and burn them. So it's very comparable to the what we've got on the equity market. So when you simply buy back stocks and you redeem it. So we've got two different, in a, let's say, traditional economy, we've got 2 different models how you transfer profits into to the shareholders. Yeah. So either you pay a dividend or you buy back shares or redeem it. I'm not a big fan of paying a dividend, because it's like taking money out of the system, let's say. That's from my perspective. So having like a buyback token and burn them make the tokenomics deflationary. It's crucial, and I will explain why, but later. But right now, I will focus on a second thing. So when there will be for us opportunity from the, let's say, price will be attractive, then we will buy back token and burn them. But if we will be on the top, let's say on the bull market, we will record another ATH. So it will be like a waste of money to buy back token and burn them. In such a scenario, we will simply use the profits and we will reinvest it into the protocol. So it means we will build up total value locked, and we will simply put our money into the liquidity pools and generate higher yield. Because in such a scenario, we do not have a cost of the capital, because we do not have to pay to liquidity providers, and we take all profits to the protocol, and then we will do the same. So there is a very simple theory of the finance. So as long as you can generate higher rate of return on your capital than your cost of the capital, you should reinvest it. If not, you should pay the dividend or distribute it to the shareholders. And we will do exactly the same. When we will see opportunity that we can reinvest the money on the higher rate of return than the cost of the capital, so it means that the cost of the tokens, then we will do it. Other way, we will simply buy back tokens and burn them. The last source how we will allocate the profits, we will allocate part of the profits into the guarantee fund. This is an additional safety point. I think that this is a very unique solution that we invented. Let's say it's a huge word, but let's say we decided, okay, such a solution we'll use. It was inspired by the guarantee fund that works in a US and European banking system. So this is simply a pool of money that is locked in a smart contract on chain, and in case of some, I guess, improbable delay in the repayment of the interest or principal, then this smart contract will automatically serve to the crypto investors. And in these 3 different ways, we will distribute the profits. So all profits to the protocol, but also how we will incentivize also on top of it some investors to hold a token. So for hold, if you got our token, you will also have a right to lock this token in the protocol. In such a scenario, when you lock our holder of our protocol, of our token of our protocol, and you lock it in the protocol, then you are entitled to the better financial products. So you got entitled to higher yield on the stable coins. So in stable coins, it means, yeah. So because our profit, yield consists of 2 different elements. So always base yield is paid in a stablecoins. To begin with, is 8%. On top of it, we've got incentives for the liquidity providers that are paid in our tokens. This is volatile part, and it will be adjusted depending on what are the market conditions, what is the demand and supply. Assuming that we've got a huge demand for the loans in the traditional world, and we want to raise more capital from the crypto space, then we can adjust a bit the total APY, but we will only change the interest rate, let's say, in our token, because we do not want to change the base yield that is always paid in the stablecoins. And to incentivize users to reinvest or keep the part that is paid in our token, we simply offer them, okay, you can lock this and get a even higher yield in a stablecoins. Yeah, so there are two different incentives. So some smart investors that want to improve a better passive income strategy, they simply will buy our token and lock it because they got a higher yield, better products, financial products, better products in our protocol, and on top of it, they also can reinvest it and get some yield for locking the tokens. And I call it economically reasonable floor price of the protocol, because how it works. So all money that we generate, profits in the generate, so we will reinvest into the protocol. Yeah? So we will build up total value locked. So it means that in our treasury will be more and more assets. So if you will divide, let's say we have like a 100 million in total value locked, that is a result of our profits, and we've got a 1 million tokens. So it means that $1 is linked with the one token. So it means that it makes no sense that the value of the token goes below 1%. Of course, makes no sense from the, let's say, reasonable perspective, yeah, because it's market, so always something can happen. But it means that when we build up the total value locked and part of our treasury, so it means that the more and more assets are attributable to the token owner. So it means that it builds, let's say, some liquidation value that is assuming that we can stop the protocol and we will distribute all the what we've got in the treasury. So each investor, each token owner would get some amount of money, and this is how we will build up this floor price. Yeah. So of course that there might be some price actions. So the best case is a GameStop case that happened a few years ago when the value of the company was lower than value of money that they kept on a bank account. So it's simply opportunity for the arbitrage. Yeah? That's why I'm saying that it's economically reasonable for price. But that's how we see the tokenomics, and that's how we see the distribution of the profits. So we will not only transfer the profits to the token owners, but we will also build up the long-term value of the token. And I think that our tokenomics also supports it when you see at the TGE, not a single token is released to the team members. We've got a 1-year cliff and then 2 years vesting. Everyone is interested in building long-term value, long-term protocol, not, for us. We are building it for 2 years in a bear market. So building in the bear market, actually we started this project on November 2021. So when the Bitcoin reached 80H, so exactly on the top. Maybe I hope we are releasing the token and we are listing at the bottom of the bear market. That would be funny, but yeah. So we for 2 years we built this project. We were able to raise money from Big Brain Holdings, other investors. That help us. Thanks to this money, we finance the development of the protocol, finance the legal analysis, and even it was difficult to raise money in the bear market, and raising money for DeFi protocol during this tsunami that happened last year was even more difficult. But still, we were able to convince investors that our vision, our mission is right, and we are building something that will stick, that will last for long years, and really makes a difference. Oof, sorry.
Oh man, that's a very good rundown. Actually, when I hear you talk, I was actually as well. I have my iPad with your beautiful website design open, and it's pretty impressive, right? It's pretty impressive, in a way that it's thought through how you're basically supporting the small and medium enterprises, right? In the first place, right? That you have a very well detailed and defined determined niche that you're trying to accomplish within your mission. So that's very commendable. And you're using the blockchain technology with the real world assets basically, and the guarantee fund, right? And all that just to make it work, right? And you've so beautifully described the very utilities and I would say the mechanics, the tokenomics of the soil token. I'm I'm just trying to think like in a simple layman terms, right? Because you guys succeeded very well on the IDO. Congratulations again. And I'm I'm trying to figure out right ahead of the listing that you have tomorrow, isn't it? Isn't it tomorrow?
Yeah,
Yeah.
it's tomorrow.
It's tomorrow, right? It's tomorrow. So congratulations on the listing as well, right? Too many.
Not yet, but thanks.
Not yet. Right ahead. Two big milestones in such a short period of time. Again, backed by 2 years of hard work. This really has to taste very well. So congratulations again. I've been thinking again. Let's imagine I'm a simple investor, right? I do not necessarily I do not necessarily want to participate in the yield generation. I'm more of a speculator, right? And I want to invest in your token, right? So, how would you approach that regular investors that would just buy a token on the centralized exchanges, for instance?
Yeah. So first of all, I assume that's what are the let's say KPIs that are let's say speculators or short-term investors are assessing. So first of all, we had a very successful IDO. So it shows that we've got some support from not from community but from the investors also. Yeah. So we've got a community that even though we are before launching the protocol, we already have almost 3,000 people that subscribe they want to test the protocol. So, but it was like a forum, so it's not like you need to put your actual name, email, and all data. Yeah, so they were interested in doing it. So it proves that people are interested in our project and our products for sure. We've got a quite low, so we were quite successful on the IDO. So it shows strength in a bear market. We got a very low market cap, initial market cap. So I guess that's also opportunity for some traders and for some early investors. And the other thing is that some projects are raising money and they got this money on the on bank account or crypto wallet, and I don't know what they are doing with it. Maybe they are paying salaries, maybe they are covering some cost of the development. But what is unique, so we are immediately start using money that our investors are investing in our protocol. All main costs were already incurred. So development cost protocol is ready. So right now we are doing some polishing touches. It was audited by the Hacken. Soon will be released, late October, early November. So we will release the protocol. All legal analysis, legal framework done. The majority of money that we raise during the IDO, we will put into the liquidity pool. So it means that it will immediately start earning revenues. So the protocol, in the very short horizon, it will be profitable just after the launch. So that's pretty unique. Yeah. Thanks to the fact that we are working with a Mount TFI that was founded by Nick, we've got a $25 million liquidity demand. So it means that just after the launch, we can immediately deploy this capital to the superb companies that will start generating revenues for us. And that's pretty unique. Yeah. So immediately, if you invest in our protocol, immediately after we get this money, we will start using it and we will start generating and turning it into more and more cash. And then this cash we will distribute back to you as a token owner. So I don't know if I can encourage someone else more.
No, I think what you said, which is super important. Someone looks at from kind of more of a speculative way. I think what you said about the team. So I think we as the all token holders, we have a cliff of a year investing for another 2 years. So none of us are at all dumping our tokens or giving liquidity. So even though it's been 2 years, hard work, we're not doing any exit. And I think if you look at different projects in the market, I think that's super important. One other thing, I think it's quite interesting because, we've been doing it, everybody gets excited about, getting exchanges and listing. It was a huge fight also, I think, from our side. And, we have great partners, Gate.io and Mexi, but it was, having listing fees that, weren't, too big. And another thing is giving how much tokens and liquidity we give. So everything, what Jakub was saying, we have a small circulating supply. And then all the fees we really have at a perfect level, that there's no such thing that even the exchanges at one point get money, and they, for example, at one point, dump the tokens, or some other one can dump the tokens, or the private sale. If you look at tokenomics, we have very, big brain holdings. We have, a lot of, individual investors that helped us. Everybody is, locked in. No one's going to be giving, liquidity, not dumping the token. So I think from a speculative view, if you look at that, that also kind of gives you the benefit and the confidence that, when you get in tomorrow, let's say, and you buy the token, there's not going to be a huge supply that everybody's going to be pushing the tokens out, and that's going to have an effect on the price, and then everybody's going to make a loss. So I think we're doing everything we can to make sure that's going to be a steady ride for the long term, because again, we're here for the next 3, 5, 10 years, and yeah.
And I think that from the investor perspective, especially in the crypto space, it's always about the dilution. Yeah, if there will be like a printing machine, yeah, so because that's the problem when they're printing more tokens and simply dump it on the exchange, and how the team or how the company is financed. In our scenario, we do not have to, and we will not sell tokens to cover our running costs, because we are generating money, real money, based on the interest that we get from the corporates. So we do not have to every day check what is the price of the tokens, because we need to sell part of the tokens to get the money to pay for the rent, for stuff and so on. Yeah, because we are generating money outside of the crypto space. Yeah, so that's generating revenues. So that's the difference. And to pay investors, to pay everyone that is providing liquidity to the protocol, we do not have to sell tokens and inflate tokens, because as I said, we are generating real bucks in the real world, yeah, and we can then pay the real bucks, simply transfer this yield to the crypto investors. So we are not dependent on the market sentiment. So we will not produce more and more tokens that will flood the exchanges and will decrease the price of the tokens. So I guess that are set of course, as in the crypto space, as always, it's not a financial advice, but these are the set of hints, features. I think that we also showed how we approach the building of this protocol. I really think that we got a blue chip approach to the building of this company. And it's all about the team. Yeah. Also, if you believe in our mission, I think that we've got a quite experienced team with a broad experience, and you can assess whether we are on what we did before, and whether we are provide in the future also similar outcome. Yeah? So that are the let's say a basket of information, or some simply set of information that you need to consider when you are assessing our project as an investment opportunity.
Mm-hmm. Very, very well detailed explanation. Again, very commendable approach. And TLDR for everybody who's listening, it's the number go up. That's TLDR, I guess. The numbers go up, right? That's what it's supposed to. That's what it's supposed to be. So having about five or so minutes left before we need to wrap. I was wondering, right? Because you, Jakub, and you, Nick, have commented on so many great and excellent and interesting points, right? That are very promising, not only in the long term, they're also promising in the short term, right? Knowing that you've just succeeded again in the IDO, knowing about your listing coming up. So what's next, if you were to put it in simple terms, what's next coming up for Soil in the near term and in the long term?
Yeah, I think the near term, I'll jump on, and Jakub will give the big idea of the long term. But the near term, so we're listing tomorrow at 1 p.m. So excited about that. Next is to get the protocol launched, which will take probably another 3, 4 to 5 weeks maximum, and we'll get the protocol launch. The money that we raise, we're going to lock it in and then really look at TVL. So total value locked, increase it, and see at the moment we increase that provides us, more revenue for the protocol. If the revenue makes more revenue, that's going to also have an effect on the price of the token. So that's, I think, very short term. Second, I think term is once what Jakub said, in through Mount TFI in our first loan pools, we have a liquidity demand of over $20 million, where we can put the money to work straight away. We have a team on the ground that's there. So I bet even up to $100 million, we're able to put it into the market and make it work. With $100 million in the market, the protocol will be very, very profitable. The second, I think, medium term is going to, because we're focused on what you said earlier, SMEs. We know the market and we know this kind of niche, and we know how to get the best return and very good collateral on this. So even when we're going to be growing AUM or assets or TVL, we're not going to be moving into bigger transactions because that's a different risk profile. So when we're gonna have more money, we're gonna focus on managers that we met through the European Bank, and we have managers that do the same thing that we do in Scandinavia, in Southern Europe. So we're gonna add on different loan pools for different managers that they're gonna open up of 10 million, 20 million euro loan pool for that part of the world, and with that we can really scale it. Sky's the limit. We can get to a couple 100 million and for on. So from that aspect, that's the main idea. And me as a CIO, I will make sure that the liquidity is there and the partners that we onboard. So that's, I think, short and medium. And then Jakub will sell you the dream.
Yeah. So Soil as a lending protocol is, I guess, the first step. As users are locking stablecoins in our protocol, and then we generate money based on the real world assets. That's what we do. But in the second phase, we want to build, and for sure we will, decentralized exchange for the debt. So simply the users that lock money in our protocol, they can simply trade the, let's say, stream of the cash flows from the real world assets, because we are the terms are viable in our protocol. So we opening some liquidity pool with a certain terms, like 8% fixed in a stablecoins. On top of it, some incentives in our token. But let's say in a half a year, maybe we can, when the global interest rates will go down, the next pool will be for 6% or 5%. I want to give you also a context, because let's say one of the main competitors, I mean that they are trying to attract clients to deposit the stablecoins in their protocols, is Aave or Compound, one of the leading lending protocols, and they are offering around 2 or 3% based on paid in a stablecoin. So we are offering 8%, they are offering up 3. So the 5 percentage point difference, it's actually, this is a space when we can go down. But I think that is also part of the marketing, because we need to attract these customers, give something to begin with, something better, the higher yield and so on. But let's say in a half a year, the interest rate will go down, and the next pool will be for, let's say, $10-20 million for 6% or 5%. Yeah? So the one that got the money locked, or let's say on 8%, can get an arbitrage or the difference of the cost of the capital. Yeah. So that's like so you can not only generate yield based on the real world assets and the fixed yield and so on, but we want to give you also an opportunity to get some exposure to the changes in the different interest rates. Yeah, so this is of course some opportunity for other investors, and of course we also allow you to, because if you lock the money, you got a titleship to the revenue streams. But we also want to give you some flexibility, because this is an asset actually, yes, that you lock. So we want to give you like some leverage. You can use this asset to get a loan somewhere else, or you can trade this asset and so on. So that's why we want to do a decentralized exchange for a debt, because actually this is a debt, but maybe not in a straightforward way tokenized, but it is. If you, from the helicopter view, let's say, analyze the features of the terms. So we want to allow you to trade it, to get some opportunity to get more revenues or extra yield from the changing interest rates and so on. So on. It will be pretty unique, because as for now there is a very little debt on chain, and the DEX for it it's not available at all right now. But for us it's like additional step for simply to enhance and increase the add extra features for the protocol, and I really believe that that will be very useful for our customers, and for us, give us some extra fees for trading this. Yeah, so it's win-win solution.
Very well, very well. Thank you so much for this deep explanation, and that actually takes us to the very last question that we have from Trader Jimmy, who's asking about what about returns on BTC backed with RWA. If we can put it in the simple terms with 1 minute response, that would be ideal.
Yes, so I will try to explain it in a very simple way. We are only using stablecoins. We do not want to take a risk of the volatility of the underlying asset like a Bitcoin, Ethereum, of other assets. Our mission is to take a stablecoin and generate for you stable, reliable, secured interest rate and passive income that you can simply predict. So you know exactly how much money you will get. That's it. We do not want to, as for now, we do not want to use any other assets. We want to have from a UX perspective, be very simple and for the crypto investors, so they exactly know how much they get based on the stable coins. And for us, maybe in the future we will add some other assets, but not in the nearest one. I think that people should and the projects companies should focus on what they know the best. And the private debt market is around $14 trillion all over the world. So taking only a drop from it would be like a massive success for us. So let's focus on this big pie, and taking only part of this pie would be great success for us. We leave some Bitcoin strategies for other protocols. They can implement or reveal some strategies for reward assets based on the Bitcoin.
Mm-hmm. Very well, very well. Is there anything else, gentlemen, that you'd like to leave our viewers and listeners with for the end of the session? Nick and Jakub.
Yeah, I think just yeah, awesome to have this opportunity to talk with everybody. I think for us, it's just if you believe in soil, it's believing in the team, believing in our experience, believing we can deliver. We're here. We're here proving ourselves. You can have access to us. You can text us through Telegram, through groups, through you guys, or on LinkedIn. So we're here. We're fully regulated with MiCA. Coming up regulations in European Union. So I think we're one of the first. We're very scalability of the platform. So we're starting out small. We can go sky's the limit, which is actually exciting. And private credit, I don't think there's ever been a better time. Of course, we're in the bear market in crypto, but on the real world asset side, it's the best time for private credit. And I think it's kick-ass time for the listing. And yeah, that's from my side, excited.
Yeah, I wanted to mention two things. First thing that I didn't cover today, it's that we are open for any retail investors that got a stable coins on their wallets and they want to generate a passive income. That's the one thing. But for us, from the scalability perspective, merging with the crypto banks or private debt funds that got some stable coins in their portfolio, this is a key. Because let's say we've got one partnership with one gaming blockchain that we are taking care of their treasury, and we will generate for them on a white label basis. We generate the yield for them. The same with the crypto banks. We're talking with the two crypto banks, so they can offer their customers some saving accounts with attractive income, attractive yield, but we will generate. They will outsource to us generating the yield, and this is for us the opportunity for the scalability. It doesn't have to be always like a direct cash flow from the investors on our platform. We will integrate also on a white label basis. For us, total value locked is the main indicator. So we want to raise as much money as we can simply to deploy this capital to the reward assets. So that's what I wanted to cover about the scalability. And the second thing is, so I wanted to really, I hope that some of IDO participants are watching us. I really wanted to thank you for participating in IDO. It was a massive success for us, and I hope that tomorrow the listing will be also a massive success. And thank you, CryptoBear, for having us for many months and years. Me and my friends, we are following you, and that's great that we have opportunity to talk today and present my project. Yeah, so that's great. Thank you for having us.
Excellent. That's been a very well spent 45 or so minutes for everybody who's been tuning in on Twitter or on /X or our YouTube. So if you're watching that on YouTube, make sure you hit the subscribe button, smash the notification bells on so that you keep notified, you keep getting all those updates whenever such a very powerful, detailed session like this very one pops up, right? And I've been joined today by this excellent duo, by Jakub Bojan, Chief Executive Officer at Soil, as well as Nick Motz, a Chief Investment Officer at Soil. That's been an excellent session, gentlemen. Thank you so much for sharing your knowledge and for your
Guys,
generosity. Thank you so
Awesome.
much.
Thanks so much, everybody. All right. Have a good night.
That's excellent. That's excellent. That's going to be a wrap, everybody. Thanks for tuning in. That's been Adrian Zdunchik, a CMT CryptoBird, talking to you, being your host, as much as I can, not being an English speaker. So I hope you managed to struggle through and strike through with my rumbles in English. God bless you all. See you around, and let's roll on to the next show. Bye-bye.